Hello, everyone, and welcome into Senior Living Live as you all settle into our very first webinar of 2021. We are so pleased to be able to offer some really good, valuable information here to kick off the new year, financial resources to help you pay for senior living. Jeff Hudson, Emily Schwartz, and Bob Rayo are here to help guide you through several options, including a few I think that will be new to a couple of you out there. After the presentation, all three will stick around to answer all of your questions that you might have, so don't be shy. Now, a reminder, all lines, audio, video will be muted. We do encourage you, though, to be a part of the conversation. And in order to do that, you just need to scroll down to the bottom of your screen where you see the little button that says Q&A. You can type your question out there for our panelists, and at the end of the presentation, we will read each of those questions. You can stay anonymous, and we will make sure to get to each and every one of those by the end of the webinar, which we expect to last about an hour. So settle in, everybody. Jeff, the floor is all yours. Take it away.
As Melissa mentioned, we're all proud partners of Arbor Company, and really our role in this whole process for you and your family is to ensure that you're paying for senior living in the best way possible. There's a lot of resources out there that can bring down the cost, but they're not always the easiest to obtain. So we have, as mentioned, Emily and Bob on the call as well today. Emily's with aidandattendance.com, and she's going to speak about VA benefits. And Bob's with Family Solutions for Care, and he's going to focus on long-term care insurance policies. So before we get started, just a little bit around today's agenda. We're going to start off with the presentation goals, and then we're going to go into detail about different financial resources, as mentioned, VA benefits or long-term care insurance. We'll go into detail around real estate options and potentially a bridge loan to transition a loved one into a community right away. And then we'll wrap it up with how to connect to the team. So starting with today's goals in the presentation, really our goal as a whole is to detail different financial resources that can help you pay for your Arbor senior living community. And again, we're going to allow for questions and answers with each expert from the different financial resources. So let's start it off today. I'm going to go ahead and throw it over to Emily with aidandattendance.com and let her go ahead and roll with it.
Hey, thanks so much, Jeff. Thank you for having me today. My name is Emily Schwartz. I'm co-founder of aidandattendance.com. Our goal is to help you learn if you're eligible and to complete the lengthy application online. So let's look at what dollars are available. So in 2021, there's a little typo there, that's mine, sorry about that. In 2021, a surviving spouse is eligible for $1,244 a month. That is usually the single woman. Then the single veteran, usually the male, is eligible for $1,936 a month. There are also two married veteran amounts. Let's start with a higher dollar amount at the bottom of the chart because that's the one that happens most often. A married veteran who needs care, who is moving into the community, is eligible for $2,295, which is $359 more than the single veteran. Now, his spouse can choose to move into the community with him or stay at home. But either way, if the veteran needs care and he's married, he's eligible for almost $2,300 a month. Then there is a married veteran amount that people are often unfamiliar with. This is when the married veteran is healthy, but his spouse needs care. If his spouse is moving into the community, the veteran can choose to move in with her or not. He can stay at home, but either way, he is eligible to ask the VA for $1,520 a month to help pay for her care. All of these amounts are tax-free, so you receive every dollar of them, and they're paid directly to the applicant. The applicant is the veteran while he's living and the spouse after he's deceased. Essentially, it's $15,000 to $27,500 every year to pay for your care. And that's why this really helps you afford senior living. So let's look at the criteria. The first criteria of the benefit is the military service of the veteran. In order to be eligible for this benefit, a veteran must have served at least 90 days of active duty. They do not have to be consecutive. Sometimes that happens if they're in the reserves or the National Guard or the Merchant Marines. They're not consecutive, but most oftentimes they are. And at least one of those days must be during a period of war. As you see on the screen, it says no combat required. That means you can be anywhere in the entire globe, even the United States, during World War II, Korea, or Vietnam. Now, these are the exact dates that the VA says are the beginning and the end of the war. And you don't have to write them down. They're on the homepage of aidandattendance.com. Excuse me, one. Sorry. You can look at the homepage of aidandattendance.com and search for yourself, as well as do the survey to see if you're eligible. Now, you also have to have an honorable medical or general discharge. A dishonorable discharge will disqualify you from the benefit, but fortunately, we don't see that all too often. All of this information is found on the Veterans Discharge Papers. If you don't have the Veterans Discharge Papers, also known as a DD-214, our website has the ability, has a link to order them. You do need them not only to check these dates, but to apply for the benefit. So that's a great first step in getting started in this application. And then lastly, I like to mention that surviving spouses have to apply on their most recent husband's service. So if they were remarried and the second or third husband is not the wartime veteran, they are unfortunately not eligible for this benefit. So let's look at the second criteria. The second criteria is medical. And what the VA is looking for is, does the veteran or the spouse or both need care from a community because of a physical or cognitive impairment? So a physical impairment means that they need assistance with at least 2 activities of daily living. The 6 that the VA recognize are bathing, dressing, toileting, feeding, transferring, ambulating. The easiest way to qualify for this criteria is by allowing the community to help you with a little bit of a shower assist. All that means is someone comes to your room and helps you safely get in and out of the shower and redressed. That's bathing and dressing. Now, certainly they can help you with lots of other great services, but those 2 ADLs are enough to qualify you. So then sometimes people have a cognitive impairment. That would be memory care, and that's dementia or Alzheimer's. That's enough to qualify the veteran or the spouse for this benefit as well. And then oftentimes we see other diagnoses like macular degeneration, Parkinson's disease, maybe a stroke. Essentially, what you're doing is proving to the VA on a 3-page medical form why the person needs senior living. Let's move on to criteria 3. The third criteria is an income calculation, and I'm going to show you 2 examples. The first example is a full benefit, and that's really what most people get. That happens when the VA sees that the total income is less than the total care expenses. So income is things like Social Security, pension, rental income, investment income, any money that's coming in every month from both parts of the couple, even if only one person needs care. Any income that's coming in every month counts as a way to pay for senior living. Well, then they look at medical expenses, and the greatest medical expense usually for seniors is senior living. So in this example, I'm saying it's $4,500 a month versus the $2,500 of income. Well, the VA is going to say this family has a net income of 0. I know when you and I look at this equation, it looks like they're negative 2,000. Well, that's not how the VA looks at it. If you're spending more than you have coming in, you have a net income of 0. And that will entitle you to one of those 4 full benefit amounts that I talked about a few slides ago, the 1244, the 1936, the 1520, or the 2295. Again, this is what most people get because the entire cost of assisted living and memory care counts as a care expense. Let's look at a partial benefit on the next slide. So here's what a partial benefit would look like. Let's say someone's income is a little bit higher. Actually, it's twice as much as the last example, but the care expenses remain the same at $4,500. Well, according to this equation, this family, or this veteran, in fact, has $500 extra dollars. Now, they only count medical expenses. So again, that's senior living and health insurance, prescriptions if you need to put them in, but they don't count any other expenses. So while he has $500 extra dollars after paying for his senior living and medical expenses, he probably really doesn't have that $500 extra. He probably needs that money for other bills. But unfortunately, what the VA does is they subtract the net income, the positive number, from the maximum benefit. So if this was a a single veteran who could get $1,936, as the example shows at the bottom, they will only award him $1,436. So my opinion is don't leave money on the table with the VA. If you're only going to get a partial benefit, you might want to consider getting some extra care from the community, or maybe moving into a one bedroom instead of a studio. You're leaving money with the VA that is you're not going to get later. So you might as well see if you could maximize the benefit. So let's look at the fourth criteria. The fourth criteria is a net worth limit, and this amount goes up every year. Apologies, I need the 2021 amount on there. It goes up every year, and it actually went up 1.3% with the COLA. It is $130,773. So it didn't go up all that much, but essentially it's $130,000. And what they ask you about on your application are your bank accounts, CDs, annuities, IRAs, 401ks, mutual funds, real estate other than your primary residence, stocks, and bonds. Basically, anything that you can use to pay for your care is going to count as an asset. Now, if you're over the asset limit, there are strategies to help you become eligible, and aidandattendance.com can connect you with experts in that field who can help you also obtain this benefit. So please don't just give up. We want you to push forward and see what your options are to be able to get this benefit as well. The assets that they don't count are your home, your primary residence, unless you sell it, and 2 acres around the home. Anything more than 2 acres is considered real estate. If you are considering selling your home, as many people are before they move into senior living, we can also connect you with resources to help you with that, because often the times the home sale is going to put you over the $130,000 limit. Final expense policies, that's like life insurance. Many people moving into the community have prepaid their funeral. We definitely recommend that. If you haven't done that, we can also help you with that as well. That is acceptable to the VA. And they don't ask about vehicles and personal property. Certainly, if you sell something and you get a windfall of money that goes into a bank account, that may cause you a problem. But oftentimes, that really isn't an issue. Okay, so let's talk about the retroactive benefits. So one great thing about this benefit is that it is paid retroactive, which means if you apply by the last business day of the month, so this month, January, is January 29th, because the 30th and the 31st are the weekends. But in this example, somebody is applying in September. That means that their benefits will be paid retroactive back to October 1. So if it takes you a number of months to be awarded, let's say in this example, 6 months, the VA will owe the applicant October, November, December, January, February, March, and that will show up in a payment usually on April 1. It is important to apply for the benefits as soon as possible, because every month you wait and you're already spending money on senior living, you're losing money on benefits. This retroactive money also works excellently with the Elderlife bridge loan, which is why this is a great partnership, because this money can help you pay off that bridge loan that Jeff will talk about in the future. So in conclusion, why would you want to work with aidandattendance.com? You can go to our website after this webinar at, again, aidandattendance.com. There's a button that says, see if I qualify. You can take a 14-question survey for free, and in about 5 minutes, you'll know if you're eligible now or maybe in the future. So I would definitely recommend everybody doing that. It's very simple, and you can email yourself the results. If you're ready to apply, if you meet all the criteria, you can move on to our application software. There's a sign up button. That software does cost $99, but it will help you get this application done in about an hour. It is a 30+ page application if you're going to do it by pen and paper. And doing it pen and paper, which we will provide to you, can cause many mistakes. And those mistakes will give you a delay or a denial likely in the benefits. Using our software gets people the benefit much quicker than doing it pen and paper. And that's the conclusion of my presentation. I will stay on at the end for any questions. I'm going to now turn it over to Bob. You're on mute, Bob. There you go.
Thank you, Emily.
You're welcome.
So I'm Bob Rea with Family Solutions for Care. Thank you very much for being here today. We're going to talk about how we help families maximize their long-term care insurance benefits and to be able to receive a higher level of care and move in quicker and stay longer. So on the next slide, you can get an idea of who we are. We are consumer advocates for people that have long-term care insurance. So we do not sell long-term care insurance. We simply are there to help people at the time that they are ready to make a claim. And we've been doing this a little over 10 years. And over that time, we've secured access to over $175 million in benefits for policyholders. And the way that we do that is we have a very compassionate team of experienced claim people. And all they do all day long is work with families like yours to help them through this process. And they become the interface between the family and the insurance company. And in order to do this, we maintain strong relationships with all the carriers. As you may know, these policies sometimes go back 20 or 30 years, and many of those carriers that sold a product back in that time frame aren't around anymore. So these claims get into the hands of third-party administrators, and we know how to deal with them as well. So basically, that experience allows us to navigate all that maze of dealing with the obstacles that the insurance carriers seem to present when it's time to simply allow that policyholder to have access to the benefits that they've paid for and that they deserve. And over the last 5 to 6 years, we've handled thousands of these claims. So very high level of experience and a very high success rate in helping families like yours. So in the next slide, you can see what makes long-term care insurance claims so challenging. Well, the first thing is that the insurance companies are very difficult to work with, as you might expect. The policies are written in ways that are very confusing. They use a lot of inconsistent terms. They're hard to understand. And believe it or not, there are over 400,000 variations of these policies. So no two policies may ever be the same. The next thing is it becomes very difficult to even reach the insurance company to have the conversation. So it takes many phone calls. Tell me last week that he had been on hold for 40 or 50 minutes, got disconnected, had to call back in, finally reached someone that couldn't help him. So it is a very frustrating experience simply trying to reach the insurance company. And then perhaps like any kind of an insurance claim, the claimants are really not versed in knowing what to say when they're in a conversation with the insurance company, or perhaps more importantly, what not to say in order to qualify and to really maximize their benefits. So in a discussion with an insurance company person, it is very easy to have a misstep and say something that causes that claim to be denied. And at times it almost seems like the insurance company is trying to cause that to happen. So you have to be very careful in what you communicate to the insurance company. And then some other challenges, as you might expect, many times families are located 500 miles away from their loved one, and they may never have even seen that long-term care insurance policy. So it becomes very confusing for the adult children in simply trying to help their mom or their dad get the care that they deserve. And then all of these policies have what are called elimination periods. Now these are waiting periods, and they can range from 30, I've seen them as high as 365 days, but they are waiting periods before the benefit payment will actually start. So you have to be able to deal with that. And then finally, over those 20 or 30 years that those policies have been out there, many states have actually passed laws, either through litigation or legislation. And the good news is that they are typically in favor of the claimant. So a lot of the verbiage in those old policies referred to things that at the time were not available as they are today. So as an example, 30 years ago, there really wasn't an assisted living community industry as we know it today. And a lot of those policies talked about nursing home care. So we have experience in dealing with that, and many states have reacted by passing laws that change the terms of those policies. So you have to be aware in the state that you're in what those changes are. So next you can see, what does Family Solutions for Care do to help? Well, the first thing that we do is you are able to receive a free review of your policy. And those policies can be 40 to 50 pages long, but we will review that for free and allow you to be able to determine your true eligibility in the care setting that you're considering, as well as what the likelihood of payment is going to be. And we look at about 50 different data points and all those confusing interrelationships. And then we do a free consultation with the family to allow them to understand what we found. Now, at that point, many of the families will elect to go it alone and begin doing that initial claim. Or they can opt to use an additional service that we offer, where we will literally handle every aspect of that claims process. So we will go off and gather all the provider and medical information to build that initial claim with the highest probability of it getting approved on the first try. As you probably know, once that claim is in place, then submissions have to be made to that insurance company every single month in order to get that monthly payment. So we handle all of that. We gather all the material needed to do that. Our claims team stays on top of that. They ensure that we have the information submitted. We ensure that the insurance company has received it, and we get that confirmation. So at the end of the month, there's no room for the insurance company to say, well, I didn't get the information this month, that payment's going to be late, we need to start that over again. We ensure that doesn't happen. So we literally take on all the communication with the insurance company. The family never even has to speak to the insurance company. And the way that we do that is we execute a limited power of attorney, and we execute a HIPAA document with the family. Then we go off and gather all the required medical records. And dealing with getting those records from various physicians and other providers at times can almost be as time consuming and as daunting as dealing with the insurance company. But we have people that are very skilled in doing that come out of the medical profession. And one of the things we've learned over the years is one of the most significant reasons that claims get denied is that the information being submitted from the record standpoint do not align with the terminology in the policy. So we know how to make sure that happens. It may require pushing back to get a different diagnostic written in a different way so that it talks in terms of the policy. And then finally, with all that experience we have in doing this, we greatly reduce the possibility of getting a denial or a mistake being made in that process. Now, one of the most important things that we do is that we go back up to 24 months to help the family look for triggers that could have started coverage under that policy sooner. And the way that we do that is we kind of go through a thought process with the family. And at the time that policy holder is ready to move into an Arbor community, many things have led up to that over the last 6 months, the last 12 months, maybe even the last 24 months. And it could be care that it might have been rehab, it might have been hospitalization, it might have been in-home care, but care that the family didn't realize could have been covered under the policy. So when we identify that, we have the ability to start that policy sooner. And when we do that, it results in a retroactive refund back to the family. And it also helps satisfy that elimination period. So you can perhaps see this a little more clearly on this chart. So that black vertical line is the point in time when the policyholder is ready to move into the Arbor community. And we've made an assumption here that there was a 90-day elimination period. We made an assumption that the community care is $5,000 per month. In this example, the family would have to be prepared to pay that $15,000 out of pocket. Now, to the left of that line is where we go back up to 24 months looking for these triggering medical events. And by the way, we typically find them. And our experience over that time has been that our average client receives a refund of $23,000 in their very first check. Now, some people will receive less, some people certainly will receive more, but on average, that's what our average client receives. Plus, if they've had to pay that $15,000 out of pocket, and we've satisfied that elimination period in that process, they're going to receive a refund of that $15,000 as well. And many of those policies state that once you meet the elimination period, that future payment of premiums ceases as well. So there may be a refund of premiums paid going back to that new start date as well. So very strong benefit at a point that the family needs it the most and puts them in control of more of their insurance money rather than the insurance company. So I'm going to stick around as well to answer any questions that you might have at the end of this. And you'll understand how to contact us through Elderlife And if you don't have a question today, but you come up with something else, please go through the process of contacting Elderlife through your community, and we'll be happy to help you in any way that we can. So Jeff, back to you.
Perfect, Bob. Thank you. Hey guys, so just wrapping it up with a couple resources that are commonly utilized to get transitioned into the community. And starting with real estate. So this is typically the senior's largest financial asset, is the equity that they've built up in their home over the years. However, this isn't like selling a traditional home. A lot of times there's multiple decision makers, a couple adult children that all have their own thoughts of how it should happen. Also, it's going to take some more time than what it takes to typically sell a home. A lot of times your seniors have been in there for a couple years and maybe it's not in the best state. So you want to take a couple months to make some repairs on the home to maximize the value. You also want to sort through your loved one's belongings to make sure you're taking care of everything that you would like to keep. Again, and it's also going to take time on the market, time to stage it, time to close. So it's not uncommon to see a funding gap of up to 6 months before receiving the sale of a home. But a couple pointers to make this process easier. It's always good to plan ahead. Determine who your family leader is going to be, who's going to be the one taking in charge of selling the property and working through that process. But also coordinate with the family members. Be prepared to work together to remove the personal items and plan ahead of who's going to get what from the loved one. Also, in order to maximize the value, plan for small maintenance and repair needs, both before listing the home and after. Like I said, a lot of time these seniors have lived in there for 20, 30 years, and there's going to be small maintenance that needs to get taken care of prior to listing. Additionally, I would encourage you, speak to a senior-focused realtor. Really, they can make your life easier in this. They have referral resources if you need help with repairs, cleaning, estate sales, whatever it is. These senior-focused agents are there to help you. I'd encourage you, trust their judgment. Do they think it's worth selling it as is, or what should be renovated? They really don't have a personal attachment to the home, so trust their judgment when it comes to pricing and marketing the home. Additionally, in addition to planning ahead, staging the home is always so important. It's typically easier to sell a home that no one is living in, but it's even easier if you remove the clutter, utilize professional photos, and make any necessary repairs up front. These first impressions on homes, it's always the best way to make a first impression is to have a clean home, and those first impressions are always so important. So again, selling a loved one's home is a great way to fund their senior living stay in an Arbor community long term. A lot of times the equity built up is really their biggest asset. But as Bob mentioned, and as Emily mentioned, and as we just talked about in real estate, it can take up to 6 months to receive the retroactive check for VA benefits, or 6 months to list and sell a home, or that 180-day waiting period. These are all these resources have a short-term funding gap before they begin. And that's why the Elderlife Bridge Loan is there. So Elderlife was founded about 20 years ago whenever someone realized that they were trying to transition their mom into senior living, but there was no financing available to do so. So let's say your loved one needs to get care right away, but all their home is tied up in, all their assets is tied up in the home. So the bridge loan is there to help bridge the gap from the time that your loved one needs care until the time that they can afford care. So whenever those funds come available from selling the home, or the long-term care insurance policy begins, or you receive that retroactive check for VA benefits, when those come available, that's when the funds that are borrowed are paid off. So again, what the bridge loan is going to do is it's going to allow that senior to move in immediately and get the care they deserve today. But also it's going to buy that family time and flexibility. So the home's not sold to an investor below market value. The senior doesn't have to deplete their savings or run up a credit card bill just to pay for the community, or ask their adult children to cover any shortfall. Again, it's buying that family time and flexibility also to maximize the value of the home and make those repairs that we just talked about. So a little bit more about the bridge loan. It's always a free application, and speed is really what differentiates the bridge loan from other financing options. It's not uncommon that we have a senior that needs to transition immediately into their assisted living community. We can take an application that morning, have an approval that afternoon, and funds sent directly to your community the very next day. Each bridge loan will be set up as a line of credit. So they'll be approved for a larger amount, and then each month you'll call us to request a certain amount be sent to the community. There's interest payments only on the funds that are utilized. There's no penalty for paying off the loan early. And like I said earlier, if you need additional funds for repairs to the home, or maybe there's a community move-in fee, we can typically add those funds into the bridge loan as well. So again, the bridge loan is a great resource to get your loved one transitioned into the community right away if they don't have the means or the liquidity right now to pay. So we talked about the bridge loan, selling the home, and real estate options. Bob went into great detail around long-term care insurance policies, and Emily highlighted the up to $27,000 in VA benefits potentially, I believe is what she said. These are all great resources. At Elderlife, our goal is to make sure you are utilizing every available resource that you have. So if you give us a call to Elderlife, we're going to walk you through all these steps. A couple of resources that we didn't go into detail at on the other slides is one is tax deductions. So any expense that goes to treat, cure, or prevent injury or illness and is paid to a licensed facility is tax deductible. So if you have a loved one that's moving into a secured memory care unit, that secure unit is preventing an injury, or other resources around helping with medication. These expenses can be tax deductible. That is a great resource I would advise taking advantage of. If you have a loved one that needs increased care, such as memory care, while their spouse can remain living independent in the home, a reverse mortgage might be a good option. That's going to allow them to stop making their monthly mortgage payment and also allow to withdraw from the equity that they've built up over time. The key there is that one spouse needs to remain living in the home. And then the final resource, just to quickly highlight, is a life insurance policy. That policy, even though you make monthly payments, that policy is an asset. The worst thing you can do is just stop making your monthly payments. You do have the ability to sell that policy on the open market, and that's going to allow companies to bid against each other and drive up the current cash value. So again, if you have a life insurance policy, please do not stop making those monthly payments if they become a burden. The best thing is to do it is to sell it on the open market. So it's three more resources that are available. Again, if you connect with Elderlife, we're going to walk you through and help you identify which resources are available to you. And we like to call that our complimentary financial consultation. And then we'll get you connected to the experts like Bob, like Emily, to further take advantage of each resource. So just to wrap up our piece of it today, how to connect. That 888-228-4500 number is going to connect you directly to a financial concierge on the Elderlife team to begin that financial consultation. Or if you'd like for someone to reach out to you and have that consultation, just shoot an email to webinar@elderlifefinancial.com. We're going to reach out within 24 hours.
Jeff, great job wrapping that up. We'll give you a breather. Emily, you got a breather. I think this question we can tee up first for Bob. So Bob, this comes from Anonymous. How does long-term care insurance impact aid and attendance? I suspect the daily rate amount adds to the income and therefore affects possible benefits. That is the question.
That really should be handled by Emily, I think.
That's
Gotcha.
actually going to be tossed to me, who had the biggest break, so that's fine. So here's how long-term care insurance works, and it's basically as you were thinking. So long-term care insurance is an additional income, so that would get added to the left side of the column if you want to look at it that way. So your income goes up and your care expense remains the same, so that might cause you to either get a small benefit or no benefit. Another way that I like to look at it, I like to describe it because I think it's the easiest way to understand it, is whatever amount you're getting reimbursed by your long-term care insurance is actually getting subtracted from your care cost. So in the example that I used, the care cost was $4,500. But if you get $100 a day from your long-term care insurance, you really are getting $3,000. And that needs to be taken away from the cost of the care. You can't get reimbursed both by your long-term care insurance company and the VA. Can't double dip. Now, sometimes when working with us, we can come up with a strategy to help you use your long-term care, maybe stretch it out, and that could be something that we can consult with Bob on, and therefore get you some of the VA benefits and have your long-term care insurance last longer. But you are correct. It could potentially cause you a problem with the aid and attendance benefit. And in our questionnaire, and then I'll be quiet. In our questionnaire on aidandattendance.com, there is actually a question. One of the 14 there asks if you have a long-term care policy and how much is it going to provide to you. So that will go into the final calculation.
We hope that answers your question out there. Thank you for participating today. Regina has a couple of questions. So we're going to start, this is a two-part question, and we'll just open it up to the panel. Does it impact sale of single-family home if there has been a death in the house? That's part one. Part two, how difficult is it to sell a house if one or both title/deed holders have passed away?
Yeah, I'll take this one. To the best of my abilities, I don't know. We work with local experts in every market. We have local senior-focused agents that are going to be there to walk you through every piece of the process. What I would encourage you to do is call into Elderlife. We're going to identify the best local agent in your market and get you connected with them. Again, they are the local experts. Every state's different. So I apologize. I can't specifically answer the question, but I can get you in contact with someone that will. I definitely want to follow up on that. I think that's a great question that I don't have the answer to. I apologize.
And there is a follow-up here, guys. So if either of you have someone in mind or a company that you use or that you've maybe passed along to others in the past, this might be a good time to share that. Regina also wants to know, is there a database for senior-focused real estate agents?
There are. There's databases out there. At Elderlife, we've actually grown our network organically by working with senior living communities in each market to ask, hey, what agents do you like to utilize in your market? So we've identified what we feel is the best agents in all markets. There are designations out there for real estate agent. It's called the SRES, Senior Real Estate Specialist. That is a great place to start. Again, that's the majority of agents that we work with have that designation. So they're all great resources. You can start there, or again, call Elderlife. We're going to identify the best agent in your local market depending on where that home is located. Absolutely.
All right, let's move along to Jan Pringle. The question here, how are you paid for your services? Great question.
I can start with us. At Elderlife, the only time the family pays Elderlife $1 is if they take out a bridge loan. There are fees associated with that due to it being us lending money. However, we actually also make money off community partners such as Arbor. So our goal is not to charge the family a lot of money on the bridge loan. By partnering with companies like Arbor, we actually are able to bring down our lending cost and offer the family the best rate possible. So we make money only when the family takes out the bridge loan. That's the only time they pay Elderlife $1. But we partner with companies like Arbor to be their outsourced financial aid office, their one-stop shop. They like to utilize Elderlife for that.
I guess I could jump in next. So I think I mentioned this during the presentation that our application software does cost $99. It is a one-time fee. You are able to log into that account for the next 3 years in case the VA asks you any additional information. We do also earn some referral fees from our partnerships, such as when we're doing financial planning and final expense policies, things that I mentioned, such as that. But our general revenue is the $99 that we charge for the application software.
In our case, it's very key to remember that everything starts with a free policy review. So it doesn't cost you anything to learn what's in that policy and how it's going to work. And we look at so many, I mean, we probably help about 50% of the people that submit policies for us to review for a variety of reasons. And we never really know the level of effort is going to be until we look at that policy. So the best advice I have is submit it for a free policy review. Let us tell you exactly what you have. And in that process, we'll determine if there's something that we can do to help you. And then we'll review what the value is at that point in time. It's typically, it can range from several hours of consultation if the family was interested in proceeding on their own, to a full-blown product where there would be an annual fee. And I will simply tell you that it's not based on the value of the benefit, and that the people that use our services, we have over a 90% renewal rate. So it works, and people value of not having to devote the time and the stress to getting this done on their own.
Yeah, that's impressive. And Bob, I think that's important to mention. Time and stress. It's something that, one, we don't want the stress, and two, we don't have a lot of extra time, especially to spend going through the minutia of all of these, especially veterans benefits. I mean, you look at even Social Security disability benefits, people hire attorneys for that. You guys are the professionals on this end for these benefits. So please, by all means, if you're needing a little bit of help, need some guidance, these are the guys that can help you get from point A to point B and not hopefully take you all the way down to Z. So let's move on. Sandy Gladstone has the question, is there an advantage to not selling the home before moving into a senior living facility?
For us, if
You-
you don't sell your home, it doesn't count as an asset, but most people do sell their homes. So I'm not recommending that you don't, but that is one little caveat that VA does give people about assets. They won't count your primary residence.
Yeah, and another option is to potentially rent out the home. We do have some families that instead of selling the home, they take and they rent it out, and then that comes into a monthly revenue stream for them. So there are some advantages certainly to not selling the home before moving in. Yeah, no, it's absolutely, and that's what our job is at Elderlife, is to walk you through situations like this and talk it out, because every family situation is different. Every family that we speak to, that we work with, they're in a different, unique situation. So there are advantages sometimes to certain families that might not be for others, such as what Emily just mentioned.
Great. All right. So Jan and Bonnie, it looks like we've got a couple of questions here for Bob. So Bob, Jan wants to know if you can give an example of where you might derive resources back on LTC that could be applied to the 90-day period.
Well, when you go back and you start the coverage earlier, so let's say as an example, we find that there's some level of care that could have started that policy 6 months ago. And let's say that policy had a 90-day elimination period. By us actually starting at 6 months prior, we have already satisfied the 90-day elimination period. So there's not a waiting period to be paid. Policy again is different. So that's the thing that's so astounding about this. I mean, there were, back in the heyday, there were probably 200 carriers writing this type of coverage. Today, there's less than 10. But there's over 400,000 variations of these policies. That's why it's very important to look at every single policy with the expertise that will allow us to really understand that in your specific care setting and how we can help the specific family.
Great. Jan, if you have a follow-up, please feel free to add it to the Q&A box. Bonnie wants to know, Bob, a long-term care policy lasts for only 2 years. What benefit can be obtained after that time?
Well, again, they're all different. So some do go on much longer than 2 years. The average life is about 2.5 years. So very close to being on the money there. I think one of the things that we find is that in the process of our claims experts, the family, they almost become part of the family, that they can really help think through and provide some additional ideas on things we've encountered that might help after the fact. And working with Jeff's group, and there may be an opportunity, for example, if funding is going to run out and there's still a spouse in the home, to consider a reverse mortgage. There may be an opportunity to, as Jeff pointed out, to cash out some other assets. And so again, there's no set formula, but when the benefits run out, they run out. And that's why planning is so important. And it's so important to do it as soon as possible in this process.
Great. Now, I just want to let everybody know, we're going to try to take this up to the top of the hour. It is currently 15 minutes till, just a little shade after that. And so if you've got any questions for our panel, now is a really good time to get them in. So moving along now to Kathleen, of all the options presented, the life insurance policy is the one I can use. Who would I talk to about this?
Yeah, so give us a call at Elderlife. So how the life insurance policy, how that resource works is we're going to connect you with a company that, again, they're going to put that policy on the open market. Companies are going to then bid against each other, driving up the policy to get you guys the best cash value today. So you can go all the way up to the end and understand what the current cash value is, and you can say, no, never mind, I'll keep it. So that is connect to Elderlife for that resource to find out more. And again, you can go all the way till the end, and then decide to keep the policy.
Great, excellent. Okay, so Emily, get ready. I've got a couple of questions coming your way. Leon wants to know, says, I was in the Navy from 1956 to 1960. Am I eligible to live at, and it ends there, I assume that may be a senior living community?
So, unfortunately, that appears to me, just from what you said, to not be wartime. The Korean War ended January 31st, 1955, and Vietnam did not start till August 5th, 1964, unless you were in the Republic of Vietnam a couple years prior, but that would still be 1961. So if he would like to give us a call, we could talk about that a little bit more, or I actually contact Elderlife and they will transfer him over, but I find that unlikely, unfortunately. Check out aidandattendance.com. It's got the exact dates of active duty wartime for that information.
Yeah, and it is a fantastic resource. So if any of you out there have any questions regarding that, that is a great place to get those questions answered. Mary Ann wants to know, must you need assistance with bathing, et cetera, to qualify for VA benefits?
So you have to show either a physical or cognitive impairment. So your physical impairment doesn't have to be bathing and dressing. It could be help getting to the restroom, help getting out of bed, help ambulating, help being fed. But usually the starting point for someone who is just moving into senior living is that assistance with bathing and dressing. And let me just clarify what that is. That is just a shower assist. It means somebody from the community coming to your room and standing by while you get in and out of the shower and redress safely so you don't slip and fall. It doesn't mean scrubbing you down, like a sponge bath or dressing you like a baby doll. It's just a simple assist to make sure that you don't have a bigger medical problem if you slip. So that's usually offered, and I would recommend that for all different types of reasons, safety as well as VA benefits.
Great. Jan, certainly taking advantage of the opportunity to ask questions here, has a follow-up for Bob. Bob, I would just like an example of what could be applied. I'm not real clear on this. And do I understand that you charge by whatever the service is after the free consultation?
Yes, so there's not a schedule of various services, but if the family elects to go forward and file the initial claim on their own, and they need a couple of hours of guidance, we can do that on a chargeable hourly basis for a consultation and kind of get them pointed in the right direction. And if they elect to use the service where we take over and literally take on all the discussion with the insurance company and do all the monthly submissions, ensure that all the monthly payments are flowing, ensure that any reinstatements that need to be done are handled by us. That's an annual contract, and we determine at the time of the free policy review what that annual charge will be. We on clients that are very simple, the policies are very straightforward, but we also take on people that have already been denied. We take on people where we've seen examples where there have been cognitive issues and someone may have not continued to make their monthly payments on the policy, and the insurance company has canceled them, and we can help them get reinstated. So there's such a variety of different things that we really don't know anything until we do the policy review. And we're very happy to do that. And if you will refer that to Elderlife, you'll see a turnaround of about 48 hours, and we'll be able to consult with the family.
We love that. Speed is everything. That's fantastic. Thank you. And I think this might be for Bob. I could be mistaken, but we'll open it up to the panel. It's from Anonymous. How do whole life policies affect benefits, especially with regard to aid and assistance? Maybe that's Emily.
So whole life policies, it really depends if they're getting dividends. So we could take a look at the policy or talk to you specifically about your situation. We want to make sure you report it correctly. But if you're getting dividends from the whole life policy, we should report that to avoid a problem with the VA. They probably already know you have the policy. So we'd want to take a look at the size of it. You're welcome to give us a call if you don't feel like our survey from the homepage is adequate to answer that question. So there is a number on our website, or Jeff can direct you to us as well.
All right. And Emily, again, for you, does help with medications count?
So medications is a instrumental activity of daily living, an IADL, not an ADL, not the six that I referenced. So the cost of medication management, which most people call it, is countable as a medical expense to offset your income. But it is not enough to get you the benefit. So many times people are only getting the medication management from the community. And that's when I would recommend you get a shower assist, the bathing and dressing, once a week, 10 minutes, 20 minutes, that will qualify you. And then the entire cost of the community will count as a medical expense, including the medication management.
Excellent. Great. And the last question here, I think if you've got a question you want to ask, this is a good time to get it in. We're in the home stretch here, but I've got a question here for Jeff. And Jeff, going back to that bridge loan, that might be some new information to a lot of the people watching here today. And you mentioned the speed in which you can get this done within 24 hours. Can you give us an example of when you have done exactly that to help someone out?
Every month, we have families that come to us and they say, hey, I want to move into this community to take advantage of this by the end of the month, to take advantage of this offer that they're offering. We get contacted every morning about the bridge loan, and I'm serious, guys. We'll have the application. We have our in-house underwriting team. We review the application, get back to the family within an hour, and then by that afternoon, we have an approval. It does move that fast. Thinking back earlier to one of the questions too around, is there any benefits to not selling the home prior to moving in, or it's always easier to sell an empty home. That is one thing that I did want to talk about. But the bridge loan from a speed standpoint, and I know Bob and Emily's team pride themselves on the same thing, is speed is always of the essence of time. A lot of people in situations of transitioning a loved one are very focused on the health and want to get that loved one transitioned in. And the financial piece kind of falls to the backside. So speed is important for all of our teams, and the bridge loan is just kind of there as a piece to get that loved one the care they need today.
Great answer. And we've had some people write in. Thank you. Certainly to our panel here today as we are wrapping this up, guys. I think that is all of our questions here today. Probably not the end of the questions for you guys, though, as I'm sure some people are probably holding back, hoping that they can talk to you one-on-one, which again is the whole reason we do this webinar, is to provide the resources for you, give you a little extra knowledge on senior living. So excellent information. All of you, we thank you for helping us navigate through all of these options, some of which, as I said, are kind of new to our viewers here today. We thank you for taking the time to share your knowledge with us. And for those of you watching, if you're interested in any of our other Senior Living Live presentations, you can head on over to www.seniorlivinglive.com. So a big thank you to Jeff, Emily, and Bob for taking the time to join us today, our very first webinar of 2021, and a successful one at that. As always, have a great day, everybody. We'll see you soon.